Shares of Netflix have surged this morning after it dropped its bid for Warner Brothers, clearing the way for rival bidder Paramount to clinch its multi-billion-dollar deal for the historic Hollywood studio. Here to explain why this could be a win for Netflix is Alicia Reese, Senior Vice President of Equity Research at Wedbush. Alicia, thank you very much for joining us.
Thanks for having me.
I think, could this be a win for viewers too? We might see more content out of this.
Yeah, it certainly. Netflix has already committed to 20 billion in content spend in 2026, whereas its prior commitment was 17 billion. It has 2.8 billion that it's getting from Paramount for breaking up the deal, and they have a lot of opportunity here because their competitors are going to be tied up in this regulatory scrutiny for the next several months, and they have a lot of content out there to go after. And yeah, I think that's going to be a win for consumers.
All right, let's talk a little bit about the deal that wasn't now. Why did Netflix pull out? Was it simply getting too expensive and not worth it?
Yeah, Netflix's primary commitment was to its shareholders, and the deal was a positive one. They were going to be able to leverage all of that amazing Warner Brothers content against their new ad stack and grow that meaningfully globally. There was a huge opportunity with theatrical in opening that market, but the pushback they were getting from Hollywood was becoming quite cumbersome. The price tag was the ultimate deal breaker, though. They weren't about to overpay for it, and at this point, they were going to have to overpay. And they didn't let their egos get in the way. They were absolutely committed to their shareholders. And they saw, based on when, Paramount came in for the deal, that their shareholders were happy, that there was a possibility that they would not go through with the deal. And so they didn't, they were committed. And I think that shows great restraint.
And what kind of a role did politics play on this? Was there any, do you think? I mean, there were all kinds of, there was a flurry of meetings.
More than you would like.
Yeah. Okay.
More than anyone would like, I think. Unfortunately, that's just a simple fact. The regulatory process could be lengthy anyway. And there were plenty of arguments against Netflix in the regulatory process anyway. With the market share arguments, it's a tough argument to make that YouTube is in the same market. There are some arguments for, many against. And I think that would have gotten hung up for quite a while. Ultimately, though, some of the friendships between Paramount and the White House might accelerate the regulatory process for better or for worse. I do think they'll still get hung up in regulatory over CBS and CNN potentially combining. They might have to create some remedies there, and then you have the CFIUS review that may or may not go through more seamlessly than it would have otherwise.
All right, and let's stay with Netflix. Where do they go now? We were talking about content. Is that what their focus is?
Their focus is on content and advertising. Those are the two main opportunities. They haven't gone big into live events yet, and they have a lot more opportunity to dive deeper into that. But they're really, really frugal with this. They're careful. They don't go and spend, lavishly on all these big sports properties. They're very, picky about what they choose, and what they have chosen so far has worked really well for them at great price tags. They also have this immense opportunity with advertising. They're in the very early innings of growing that, and they can double their advertising to $3 billion this year. That's just the very early stages, and they can, really expand that globally and leverage all of their content globally, their ad stack globally. There's just so much they can do. So with or without the deal, Netflix had a huge opportunity, and their share price recently hasn't reflected it, and we expect it to again soon.
I mean, I was just looking, I think they're up, doing the quick math, 10%, close to 10%,
yeah,
a little
10%
under right
today.
now. Yeah, 9.3. It was some quick math there. And with the live, I mean, what do you see them possibly going for with live? You said they're picky, but is there anything that they might have an eye on?
Yeah, I mean, they didn't go for the Men's World Cup, but they did for the Women's. They go for a couple NFL games here and there. There are certainly more NFL games they can go for. One-off events are great for them. Boxing is really great. They, went after UFC. The price tag ended up being too high, so they pulled back on that, similar to this deal. They're just going to go for the right kind of content that works for the price tag. What I think will be really beneficial beneficial for them is to take international sports outside the U.S., outside Canada, and really grow those to a large extent by leveraging that against their global audience. They've done that with a lot of Korean content, let's say, and they can certainly do that with sports. Let's have some Aussie rules football for a change.
It sounds like they kind of like, to a degree, cheap and cheerful. They want good bargains.
Yeah. Yeah. And they're very profitable as a result.
I'm just going to bounce again back to Paramount with CNN, and what do we see happening with CNN with this? Could there be a merge, or could they be forced maybe to sell it off?
Yeah, they might be forced to sell it off. That might have to be a structural remedy that is forced upon them. I'm not sure in this particular environment, but with the scrutiny that was promised to Netflix, I would be surprised if there wasn't, at least some deep level of scrutiny against this one as well.
All right, and big picture, any other mergers on the horizon right now, or is this about what there is? Was this the opportunity?
Well, yeah, I mean, Warner Brothers was distressed just because, they had some amazing content out this year. Pam Abdi and Mike DeLuca have done a phenomenal job on the theatrical and, content buying side. People are watching their content and loving it. So I think they're really healthy on that side, but they just had a lot of debt that they're still trying to work through and trying to, cut their way to prosperity, which is tough in this business. You have a lot of other studios that could potentially be up for sale. Sony may eventually, get rid of their studio arm. You have some smaller studios. You have Lionsgate still up for grabs potentially, and then you have smaller studios like A24 that are really seeing a heyday, putting out tons of good content.
And if you were a betting woman, any of them that you'd pick? I'm gonna put you on the spot for a sec.
If I was Netflix, I'd go after A24 personally.
All right, we're gonna wrap it up there. Alicia, thank you very much for joining us.
Thank you.
Alicia Reese is Senior Vice President of Equity Research at Wedbush.